Bitcoin has crashed down to the major weekly support at 25.2 to 24.4. In today's video, we're going to be discussing the announcement from the Federal Reserve in regards to pausing their interest rates, the short-term time frame price action, and the macro charts. Let's go ahead and dive in. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. Bitcoin has finally seen the correction toward 25.2 to 24.4, a target we have been discussing on this channel for over 2 months. In fact, selling our Bitcoin right at the top at 30,000. Since then, we have been targeting this range. So it's great to see the prices move down to this level, but the big question is, what will happen next? Are we going to find support here? Are we going to drop lower? Or will this be a reversal for the bulls? In today's video, we're going to be discussing everything from the short term, the macro, and of course, the Federal Reserve announcement on interest rates. Before we get into it, smash the like button, hit the comment button, subscribe to the channel, guys. We do daily videos for Bitcoin focusing on the facts, the data, the technical and structural levels, no hype, no emotion, no BS, just pure, raw, honest TA. That is the kind of content you like and are interested in. Join us on Telegram. The second link down below. We give you access to updates, charts, analysis, videos, educational posts, news events. There is so much beneficial content in here, guys, to teach you guys everything you need to know about the markets, the economy, and keep you in the loop with not only Bitcoin, but cryptocurrency as a whole. If you're interested in joining our trading channel, which is our VIP group, you'll get access to exclusive updates, trade signals, and analysis, such as these trades we took just before the news event last night. Our Ethereum short hitting all targets right over here. Fantastic to see. We can see it right over here. All targets, entries, targets, stop losses with justifications. Our Bitcoin short hitting all targets for 99% profit. Entries, targets, stop losses, and justification. Not only are you going to get access to this group, you'll get access to our group chat where we have all of our members discussing trades, doing trades, and so much more, guys. We have 4 separate group chats you'll get access to. For more information on how to join, head to the pinned comment, click this link, and contact me. Let's go ahead and dive into the video. There's a fair bit to talk about today, guys. We have seen Bitcoin move towards that major area of liquidity. In fact, really quickly, this level with 25.2 to 24.4K level is no random level. It is a very significant level as it represents the weekly support. It is a weekly horizontal support. In fact, the last time we broke above this level was after over 300 days or close to 300 days of consolidation. We were consolidating underneath it for 277 days, finally breaking above it, breaking over the 200-day moving average on the weekly, and putting us into a weekly uptrend. We are now coming back down to retest this level just over a year later in total. 366 days, we are now coming back down to retest this level. This level is an incredibly strong base of support, and if lost, the weekly trend will be flipping officially bearish. Let's go ahead and discuss the technicals. So, 24-hour volume is 74 billion, up 10%. Liquidations did spike up a fair bit on the result of course, the interest rate data. We saw 147 million in liquidations, up 118%. As for the month of June, we can currently see we are down 8.02%. Again, not really too surprising because we did see again that bearish candle print on the monthly. Of course, if you've been following the channel, you would know we saw a bearish engulfing candle. Now, bearish engulfing candles are a candle when the opening price, okay, of the prior candle is of course higher than the closing price of the most recent, meaning it closed under the opening price of the last. This represents a shift in momentum and a shift in overall strength. It is more so significant when this is printed after a significant move in either direction, whether it be downwards and you get a bullish engulfing candle or upwards and a bearish engulfing candle. We have seen a 20+% correction. We discussed this from this perspective and a whole range of other perspectives, but we have seen that move play out. The question is, are we going lower now, or is this move toward the downside complete? We'll get into that in today's video. So moving back over here, guys, the volatility index on the 30-day period, you can see not really too much happening, more or less plateauing. On the 60-day period, again, not really too much happening, more or less plateauing. As per the liquidations, we can see the vast majority of liquidations occurred in those long positions with only around, we're looking at 15-16% of liquidations occurring in short. So longs definitely did cop the short end of the stick yesterday upon the news result. But let's go ahead and talk about the DXY, and let's talk about the news result, and then we'll get into Bitcoin. So we saw, obviously, PPI data come out bearish, right? Bullish, sorry. PPI data came out quite bullish. It came out at negative, I think it was negative 0.1%. Let's go up and take a look. PPI data, negative 0.3%. So that was signifying inflation was back down. It was falling month on month. We also saw the month-on-month inflation suggest it was going back down. We saw, as a result, the Federal Reserve pause interest rates for the first time in a long time. We discussed the probabilities and the potential results of the pause in the channel. So if you're not in the Telegram channel, go ahead and join up, guys, as we talk about all of this leading up to events. We're discussing what we assume the market was going to do, how the market will behave, etc., etc. But we did see a pause in interest rates, and one of the scenarios we discussed was that if they did pause interest rates due to the probability being so much in favor of it being paused, the reaction could potentially be bearish if during the Federal Reserve meeting they announced that they didn't have clarity in the future interest rate hikes. And that's what they did. They essentially paused interest rates and they said, we are going to be lifting them again in the future. And that kind of covers all tracks. Like I said the other day, if we do see the interest rates go up and down, that has a direct impact on the market risk and thus market assets or asset prices within the market. When we see interest rates move, we see something called perceived systematic risk move, and we see the perceived trajectory of the future risk adjust. In this instance, what we saw inflation has continued down, we saw interest rates have continued down to 0.25, and now we have created this perceived trajectory. This represents a bullish environment for cryptocurrency, for stock market, but the problem with this is their comment was they are likely to increase interest rates in the future. The only reason they are likely to increase interest rates is because they expect inflation to go back up. So we have this discrepancy again between what is happening and what they're doing. They're essentially telling us inflation is likely to go back up later, and therefore we are now pausing interest rates right now to give the banks relief, but we're going to be increasing them later. What does that do? Well, it takes this perceived trajectory of interest rates from bullish and it turns it back bearish. And that is why we saw cryptocurrency correct. That is why we saw the stock market, hold and plateau at these resistance levels, which we'll discuss. That is why we saw the DXY move up. And that is exactly what we're seeing here, guys. We saw the DXY move back upwards. Now, it hasn't moved up strong enough yet to actually reclaim that uptrend. It is officially under the uptrend, so it is very much now in a short-term downtrend. If we do break above this uptrending resistance, we can expect the DXY to continue upwards. And of course, if we break above this downtrending resistance represented by the dotted line, we're going to be pushing into this level. While we remain underneath this downtrending resistance represented by this line here, we are more likely to push lower. But again, if we do break above, we're heading upwards. As per the stock market, we can see the S&P 500 is coming very close to its uptrending resistance. This is, of course, a rising channel formation, which represents overall uptrend, but a weakening uptrend. It represents macro weakness. We do need to invalidate the structure for S&P 500 to push higher. The next target will, of course, be 4,600 if that occurs. Watching these trend lines, the upper trend line and the lower trend line. A weekly close above the upper trend line will invalidate this bearish structure and push the prices higher. A weekly close below the lower trend line will invalidate the bullish structure or bullish argument and push the prices lower and validate the bearish structure. Remember, we said a weekly candle above this level would send the S&P 500 upwards. That is what we've seen. Looking at the Dow Jones, the Dow Jones hasn't made as much headway as the S&P 500. You can see it is currently retesting its major rejection zone on that weekly chart, yet to break above, again pushing toward an apex. We are going to make a directional decision before come mid to early August. A breakdown of this wedge here is going to result in a continuation downwards. A weekly candle above here could push Dow Jones all the way up to around 36,000. Keep your eyes on that chart. Let's go ahead and jump into Bitcoin. Now that we have discussed the stock market, now that we have discussed interest rates, Now that we've given you a basis of understanding of what we expect in the future, if interest rates are likely to go back up, it means inflation is likely to go back up, which means their pause this time around was nothing more to appease the banks to provide relief to the banks and kind of take a step backwards for another month. But if they intend to bring interest rates back up, they must intend inflation is also going to rise. And therefore, at some point again in the future, the market risk is going to turn back on and assets will correct. This is not a good sign. This is actually a very bearish result and it is not ideal. We do need to see consecutive pauses, potentially even going into negative rates before the macro for the markets become healthy and put in a position that can facilitate a macro uptrend for both risk assets, cryptocurrency, and the stock market alike. Let's go ahead and take a look at Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Starting on the daily, then we'll break it down. So as I said already, we saw a huge correction. If you've been following the channel, you would know we sold at 30,000. We have been bearish ever since. Why? Because we're underneath a daily downtrend resistance. This is our daily downtrend resistance represented by our black trend line. We are still in a downtrend until this trend line breaks. So looking at the trend from a daily perspective, we'll get into a smaller time frame perspective later and discuss what we expect to happen on the short-term time frame. But on a daily perspective, we are holding our bearish bias until we break above this downtrending resistance and we get a momentum shift. We need to see 2 things, and I've covered this a lot. We need to see, number 1, the price break above the downtrending resistance, and number 2, that momentum flip this downtrending trend line on the RSI. If those 2 things occur, it can give Bitcoin the strength it needs to push higher. However, the deeper we push down, the longer we push down, 2 things occur. Number 1, the bearish trend on the weekly gets stronger as we transition downwards, pushing through this range from a weak bearish trend into a strong bearish weekly trend. Okay, and number 2, the breakout conversion point moves from 28,000 lower, which means there is no confluence anymore of the horizontal resistance between 28 and 30,000 and the downtrending daily resistance. Meaning, if we do break upwards from this trend line lower down, 28,000 now is going to be a separate resistance, as before it was a conjoined resistance, meaning it will provide another obstacle we need to break over for the bulls to reclaim control. It is not looking ideal for bulls. It is not looking good, and it hasn't been looking good for quite some time. We have now seen that develop on the daily for weeks. Okay, looking at the lower ranges, guys, for the macro bullish argument to come into play, nothing has changed. We need to close a candle above 30,000. The bullish weekly is still intact, but it is a weakening bullish trend. This is an incredibly weak bullish trend right now, as we have now retested that same point of which that put us into a weekly trend in the first place. So we're more or less neutral. We're pushing closer to neutral on the weekly. We are bearish on the daily and thus a weak bearish trend. If we want to see the weekly trend turn bullish again, we need to see the daily trend turn bullish, and thus we need to see the validation of the RSI break and the validation of the daily trend line break. If we do drop lower here, guys, we are moving between a huge chunk of support. The distance between $20,000 okay? And 24.4K has a considerable amount of historical orders and thus historical support. It is not going to be a range that we expect volatile price action to occur. It is not going to be a range that we nuke down from. If anything, it is going to be a slower grind. And the slower these grinds occur, the longer and more opportunity that reversals do develop in. So we'll go to the weekly chart really quickly and come back to the smaller time frame. The weekly chart, guys. The weekly chart. What a chart we are looking at here. It is not looking good at all for the bulls on the weekly. As you can see, we have closed a weekly candle underneath the 200 moving average, representing a shift in higher time frame strength. Not only have we closed the 200 moving average, we are now halfway through our second weekly candle underneath the 200. This weekly candle is the weekly candle that is pushing us into that 24.4 to 25.2K level, a major support. We do need to see a strong bullish reaction at this point. We do need to see this level held for the price to continue upwards. Now, I've said this already. We are not technically bearish on the weekly yet. We are weakening on the weekly. We have weakness on the weekly as we have lost major levels. We have lost the 200 moving average. We have lost the 50 EMA, and we are retesting our major support. This is essentially the last line of support for the bulls on the weekly chart. If we lose this level, we are going to see the price potentially drop all the way down towards 21,000. We could potentially go all the way down over here. This whole range is a very large range that we can actually push down and find support realistically anywhere within. So we do not want to see the price lose 24.4K, but we can see the price on a smaller time frame come a little bit lower, and we'll discuss that. Furthermore, I want to discuss this uptrend. We do have a uptrending support line as represented by this diagonal level here. This could be a logical target for Bitcoin in a smaller time frame that would result in a temporary correction under 24.4K. So I'm going to go ahead and say this again. For 24.4K to be lost, since it is a weekly support, we need to see a weekly candle close underneath 24.4K to confirm and validate that trend level is lost. So do not be shocked if we see the price come down, come underneath it, bounce this trend line, and move back up. That is a possibility. When do we flip weekly bearish? When we get a weekly candle close underneath that horizontal level, or we break below this uptrending trend line, which has represented the weekly uptrend since December. Awesome stuff, guys. Great to see. Let's go ahead and move back over here. So number 2, let's take a look at our Gaussian channel. The Gaussian channel is showing that we do have a potential support. We have our midline support. The midline support is a phenomenal level of support on a chart. We can see in history, every single time we break above the midline, we generally push through the channel. You can see instance 1 here. We can see instance 2 here. In this instance on the monthly chart, we broke above the Gaussian channel midline, but we failed to push any higher. This is the first time on a monthly chart we have seen it, but it doesn't mean we aren't going upwards yet. But if we do lose that Gaussian channel midline, it will validate a rejection from this point, and it could push us lower. So we are watching that midline. Where does the midline line up with? 24.4K. Again, providing support at $24.4 thousand, guys. Watch the Gaussian channel midline for the next move. I want to go ahead and talk about the RSI really quickly, the monthly chart, and then we'll wrap up with the smaller time frame. If you've been following the RSI, guys, you would know we saw a huge momentum shift a few weeks ago at the 62 point on the RSI. We actually used this momentum shift to predict this 20% pullback. That is one of the main reasons I sold at 30,000. As you can see, we saw the RSI break down that 62 point on the RSI, representing a negative momentum shift. Now, just as the 62 point on RSI represents negative shifts, and every time we lose that level, we actually end up crashing, it also represents positive momentum shifts. Every single time we break above that level, we end up moving upwards. You can see examples over here as per the green lines I am drawing in. Look from the green line and then look to the right of the green line to see what the price action is doing after that momentum shift has occurred. Every single time we get that positive shift, we do also see a move toward the upside. So just as we saw the move down, We're waiting for that positive momentum shift on the weekly as another point of validation for the price to move upwards. Now, before any of that occurs, we need to see the daily trend to turn bullish. We need to see the price break above 28,000. And then if we see that as well, that will give added confirmation that Bitcoin could potentially break a monthly candle over 30,000 and then send us into that macro uptrend. Let's go ahead, guys, and discuss the short term. As you can see, we lost this major support level. We said already, major support, 25.2k if lost. We have lost it. We have head down. There is no doubts about it. We have definitely retested and broken below 25.2. There's nothing more to say about that. This range has now completed. The question is, what is happening, guys, on the smaller time frame? What are we looking at? What do we expect? So let's move it all the way down to the hourly chart and draw some structures in. So first and foremost, let's go ahead and put our support level in. We have a major area of support right over here, and that level is going to line up with just over 25,400. We're going to bring it up to over here to retest these low points. You can see low points 1, low point 2, low point 3, low point 4, and crash. Awesome. Number 2, we have our downward trending resistance. We'll go ahead and draw that in, even though it's not entirely relevant anymore. We can see we have our downward trending resistance. We can see multiple points of retest. This, in fact, was a descending triangle. If we take a measured move from the descending triangle pattern, it is actually going to suggest we are going much lower. In fact, it is suggesting we're going down to 23.6k. Now, yes, that is going to signify we're going to lose this support and potentially even break down underneath its uptrending support line. However, measured moves do not give you exact targets. They give you ranges. We have to use structural levels to determine where the price can bounce from. And therefore, if we look at this current range and look at this trend line, we can see it lines up around 24,000 to 23,800. In my eyes, that is an applicable level to be looking at and an acceptable target. I'd be looking for that move toward that level on the next move if this measured move pattern plays out. For the bulls to reclaim control, we need to break back above this resistance. More importantly, break above this downtrending resistance. Until then, the bears do have control. On the immediate smaller time frame, I am expecting to see one thing occur that I'd be watching for new shorts. I would love to see the price move up and retest that resistance. Retest it as a support resistance flip before coming back down. That would fill this VRPV gap over here and facilitate another move toward the downside. However, that is not for certain. I'd be watching the smaller time frame. I'd be watching how it plays out. It is definitely pushing sideways here. We can see the price action is drying up. The volume is drying up. The liquidity is drying up. We do have a few potential structures developing. Maybe a possible triangular structure developing over here, which will be a bearish pennant. If this bearish pennant plays out, we could definitely see the price actually move more toward that downside, even targeting something as low as 24.4 for the next move. So on the short term, I wouldn't be too quick to act. I'm not quick to act right now. I'm waiting for the price to develop. We've already had massive shorts, we've had massive profits. All our targets been hit. Now is the time to just let the price develop, see what happens, and jump in. The last thing you want to do is take too many aggressive positions on these massive moves downwards, trying to catch the knife and then just get wrecked again. Wait for strength to show. Right now, I don't see too much strengthening Bitcoin. What I am seeing is compression and consolidation. If we take the average price, we take volatility down, and then we have volatility sideways, we see this as reflected by the 50 EMA. So the 50 EMA is now reflecting the strength of the trend over here. I would really like to see the price break above the 50 EMA on the 5 minutes and above this downtrending resistance to validate a potential move to clear this gap on the VRPV to take us to 25.5. I think if that happens, I'll be looking for longs. Until then, I'm going to stay out of shorts. I'm going to stay out of the market and potentially just take a few scalps and more or less just wait and see what happens. Because again, I don't want to be taking late shorts on the move down. Very shorted. We already took our profits down 25.2. Now we're just waiting for the next move. Anyway, guys, I hope you enjoyed today's video. Obviously, there is a lot to talk about. There is a lot to cover. I can go into so much more detail, but I'm trying to keep today's video a little bit shorter than usual. So thanks for watching and sign up to the Crypto Academy courses at gmail.com. You can join our course. You can learn how to trade. You can find out how you can manage risk, how you can find trades of your own, most importantly, and understand basic TA and risk management. Go ahead and sign up. If you're interested in the VIP, contact me, sign up to Bitget to support the channel, and of course, guys, smash the subscribe button to tune in to our daily videos. I'll see you guys in the next one. Cheers.